You ever look at the world of investing and feel like it's a club with a really high cover charge? Well, today we are kicking the door wide open. We're going to talk about a powerful tool that really levels the playing field for everyone. It's a concept used all over the globe, and the model we're looking at is pretty much the standard you'll find in markets everywhere, including Israel, designed to let everybody get in the game.
Okay, let's start with a situation I'm sure many of you have thought about. You've worked hard, you've saved up 10,000 shekels. That's fantastic. Now you want to put that money to work. But if you try to buy individual stocks or bonds on your own, you're going to hit some pretty big roadblocks right away.
And here's the fundamental problem. First off, the bank commissions just to buy a single stock can be so high, they literally eat up your potential profits before you've even made a cent. And second, with 10,000 shekels, you just can't buy enough different things to spread out your risk properly. So you end up paying high fees for a really concentrated high-risk portfolio. Not exactly the best way to start, right?
So what's the way around this? How do you get past that barrier? Well, the solution is actually a beautiful and simple idea. It's all about the power of teamwork for your money. It's called pooling. This is all done through what's called a mutual fund. Now, get this. A mutual fund isn't an investment in itself. It's better to think of it like a big container or a vehicle. It's a professionally managed pot that holds dozens, sometimes hundreds, of different investments, all bought and paid for by thousands of people just like you.
The whole idea is really that simple. Your 10,000 shekels doesn't have to go it alone. It gets combined with money from tons of other investors, and together, you create one giant pool of capital. Let's see how that actually looks.
So you've got one person, maybe they invest 100,000 shekels. That's a good chunk of money, but by itself, its power in the market is, still pretty limited.
Then another investor comes in. They put in 300,000 shekels.
And then a third investor adds a cool 500,000 shekels to the mix.
And just like that, together, all those separate amounts create this powerful 900,000 shekel fund. Now, with this kind of scale, a professional manager can buy a whole range of different assets and get access to opportunities that you or I just couldn't on our own.
So you might be asking, okay, how is my little piece of this giant pie tracked? Well, it's pretty clever. You don't actually own tiny fractions of every single stock. Instead, when you put your cash in, you buy what are called participation units. Think of them like shares of the fund itself, and the value of your units goes up or down depending on how well everything inside that fund is doing.
Okay, so having a pro manage all this for you isn't free, of course, but the costs are actually very straightforward. Let's break down the two main fees you'll see.
First up, you have the management fee. This is what you pay the fund manager for their brains, for doing all the research and picking the investments. Then there's the trustee fee. This is a smaller fee that goes to the bank or the big institution that's actually holding all the assets, kind of like a security guard for your money. And this chart shows you how that usually breaks down. So let's put it in real terms. A total fee of, say, 1.2% per year means that for every 100 shekels you have invested, the cost for a full year of professional management and secure storage is about 1 shekel and 20 agora. That's it. And here's a really important point. This isn't some big bill you get hit with once a year. It's actually calculated daily. Every single day, they take the fund's total value, they divide that annual fee by 365, and they deduct that tiny, tiny little slice. This way, the fee you pay always perfectly matches the fund's value as it moves up and down each day. All right, so we've covered the nuts and bolts and the costs. Now let's get to the best part. What are the huge game-changing advantages for you, the investor? It really comes down to three massive wins. First, accessibility. You can start with almost any amount of money. Seriously, even just a few hundred shekels a month. Second, instant diversification. The second your money goes in, it's spread across tons of different assets, which dramatically lowers your risk. And third, a really big one, liquidity. Let's just zoom in on that word liquidity for a second, because this is a key feature that gives you incredible flexibility. It's what sets mutual funds apart from a lot of other ways you can save for the long term.
And this is so important. Unlike some retirement plans or savings products that lock your money away for years, a mutual fund keeps your money accessible. If you need the cash for an emergency or for an opportunity, you can sell your units any day the market is open. You'll get the money at its current value, usually within a day or two. That gives you a huge amount of control.
So what's the big takeaway from all this? It's that mutual funds basically make investing democratic. They level the playing field, giving someone with 500 shekels the exact same access to professional management and a diverse portfolio as someone investing 500,000 shekels.
This entire structure empowers anyone.
You, me, anyone with even just a couple hundred shekels a month to stop being a spectator and become an active investor. It takes the big, scary, complex stock market and makes it totally accessible. So the real question isn't just about how you get started, it's what's one financial goal you always thought was out of reach that now seems just a little bit closer?